and welcome again to Lunchtime Special. I'm your host, Pastor Cynthia West. We are so grateful that you have joined us. We are looking for another exciting time. Thank you for all of the response that we received last week with all of these great specialists on. However, before we begin, I want to remind you of the King's Pantry, a nonprofit organization located on 30 Florence Street. If you're in need of food, please call that. Please call the King's Pantry on 30 Florence Street, and we will be so grateful to service you from 10 until 1:30. We are so grateful. Well, we're excited to get into the show today, and in our conversation, we want to introduce our panelists again. Thank you again for all that you've done and letting us know how you really appreciate this. We are so grateful. So let's introduce some of the greatest in the world. Before we do, Bradley Vincent states, money is a tool. Used properly, it makes something beautiful. Used wrongly, it makes a mess. Our first introduction, Jim Dutch, the president of JD Financials.
Hello, everyone.
Good afternoon.
Good afternoon.
How are you?
Terrific. Couldn't be better.
I am so glad you joined us again. It was so exciting last week. So we're looking forward. Can you just give us a little bit about yourself?
Oh, yes. I'm a lifelong Connecticut resident, grew up in Stratford, attended school in Bridgeport, so I have ties to the Bridgeport area. I currently live in Monroe, Connecticut with my wife and 3 children, and I have 6 grandchildren. I've been in the financial and insurance services for 27 years and have thousands of clients in the tri-state area.
I like the thousands of clients in the tri-state area, me being one. That's a great thing. Well, let's introduce our next guest. It's Calvin Michael Jones. He is the branch vice president of People's United, My Banking Place. How are you?
I'm doing well today, Pastor. How are you doing?
I am doing well. I am doing very well. Because we did not read the bios from last week, will you give us a little bit about yourself?
Sure. I'm Calvin Jones. I grew up in the Beardsley Terrace from 0 to 18, and I matriculated on to graduate college at North Carolina A&T, where my daughter will be attending, and I will be taking her next week. Actually, I'm lying, in 2 days, on Thursday.
Oh, my goodness.
Yes. I am the vice president of People's United Bank. Been in banking for 13 years. Also the assistant director of the Village Initiative Project, College Prep and Life Skills Program. Board member for Capital Prep Harbor Schools, and a father of 4 children and a lovely wife.
I am so grateful to hear that. Do you know that I attended A&T? Aggie.
Aggie? What? Aggie? What?
So we are so grateful. We have so much in common.
Yes.
It's good to have you again. We are so grateful that you decided to join us. Also, we have Mr. Sam Wilson, Jr., CPA. How are you this afternoon?
Great, Pastor. How are you? Good to see you again.
I'm doing well. I am so grateful that you're able to join us. I know that from last week you had some things that were scheduled. So glad you could work it out.
Yes. Actually, it was. I was inspired by what you're doing, Pastor. I think that.
Thank you.
This is what pastors should be doing: feeding the people, giving them information. I was so impressed with the professionalism that I kind of changed some things around and made it possible to be here.
We're so humbly grateful for that. Because we did not read the bios, can you give us a little bit about yourself?
I am a CPA, owner of my own accounting firm here in the city of Bridgeport. My wife, Melissa, and I, we've established a not-for-profit called VIP about 20 years ago. She runs and manages that. We have 5 children, some grandkids. I won't say how many. We reside here in the city. We've served this community for over 30 years doing what we do. So we're excited to be a part of this program and to continue to share, hopefully, some good information to the people.
Thank you so much. I want the public to know that we're one of Sam's clients also. So we've known him for so many years. So very grateful. Well, let's get to our program. Last week, we had so many response of saying how they enjoyed it, all of the things that they learned, and a couple of people really did jump on some of the information and made it happen for them. So let's see what we can do for our viewers today.
Yes.
The purpose of the bank, I want to start with that. A bank is a financial institute which involves in borrowing and lending money. Banks take customers, deposits in return for paying customers, and annual interest payment. The bank then uses the majority of these deposits to lend to other customers for a variety of loans. Am I close, Calvin?
You are very, very close. I'll just make a couple of key. I like things to be just about exact. So
I love that.
The banks don't pay interest yearly. They pay it monthly. And each bank gets to choose how they want to pay it. We accrue it daily, but we pay it monthly at People's. That's what we do. Some other banks do it a little bit different, but most banks definitely accrue on a daily and give you credit on a monthly basis.
All right. The question then is going to be this. What is it and how do you think it will revolutionize the United States banking and fundamentally change the financial sector? The what is it is the digital dollar. Will you guys please explain this digital dollar and how it's going to affect us in the future?
Well, I think we talked a little bit about it last week when we talked about, you opened up the show talking about money in its physical sense. The digital dollar is going to expand upon that idea where money is going to be an idea, meaning you won't be touching, but it will be flowing and moving from place to place, hand to hand, wallet to wallet, mobile wallet, by the way. Okay. But those are all enhancements that banks are looking forward to do. What's causing these changes? Well, the younger generation says, we don't want to walk in the bank. Please make something where I could just do my banking from here, and I don't want to. So all those type of asks, so to speak, of the customer are making these advancements go faster. And guess what else made it go faster? COVID. COVID allowed banks the opportunity to be able to get to some of these key metrics that they want to get to anyway faster. Because what does COVID do? No touching. No, that's 6 feet away. So now what we're doing is saying, hey, go use the ATM more often. We've been at it there for you. Let me show you how to make a mobile deposit. I'm literally doing that every day, helping people learn how to do banking away from the bank. So when you talk about this digital thing, we're already there. And what's going to happen is we're going to see less and less money and currency being exchanged in a digital form more often than not.
Okay. So this digital dollar is all of these apps and all that we're doing now with money being transferred. Do you all believe that the day of the checks being written out is almost over? Please say no. Please.
I think so, Pastor. Last week I mentioned that, in the 20th century, one of the things you're going to see is change. Change is happening. It's going to accelerate. This is all part of that change. If you look at the history of money, it started out with coins. Then you went to the paper dollar. The reason why it changed is because if you were going to buy something, and let's say it was $1 million, you don't want to carry $1 million worth of coins. So then it went to paper, which made it easier to carry. And then it went to this digital dollar. Now you have credit cards and you transfer money with one swipe. I have an account at People's Bank. I never go there. I just make transfers. My son, it's funny because I have a millennial son. I have 2 sons. And he had to buy something. And he had to come to my office with a check. I said, son, don't forget to bring your check. He said, what's that? I said, what do you mean, what's that? I said, you don't have a check? He said, no, I don't use checks. I said, well, how do you pay your bills? It's all online. It's all digital. So
I can't imagine.
Their mindset is already there.
It's there.
It's
there. It's there. I remember the time, even in church, that we would have, to pass the baskets and all of that. But now we have our own app. Turn on the app.
Yes.
Give what you would.
Let me say this too. I don't know if people realize there's been an advancement even in that. The credit card was the advancement from cash. Cash App, Zelle, person-to-person pay. They're the advancement to the credit card because now you don't even have to have a card. I literally can open the app, say, hey, Pastor, I owe you $60, don't I? Give me your telephone number. Boop, 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 boop. And I send you $60. You never gave me any banking information because you enter it and it winds up in your bank account. That's the advancement from the credit card.
Do you know you're educating me?
Well, actually, it's advancing even more than that, Calvin, because there's a store that I heard of. I think it's in New York, where literally you just walk in, grab what you want, put it in a basket, and walk out.
I heard about that. Yes.
You're paying for it as you walk out. So everything is pretty much getting paperless.
It really is. And it breaks my heart because I'm the one that still writes checks out every month. And I'm like, I think I'm going to have to stop doing this and start doing this digital thing. So it's interesting. But it also brings up the non-bank financial institutions that we have not been discussing. Now, Jim, I'm in your area.
Yes.
Okay? I'm in your area. Come on and explain some of those to me.
Well, the non-bank financial institutions are organizations that are tied to employment. I always recommend some pre-tax savings if you have a 401k or an IRA or a 403b, any employee-sponsored plan, because a lot of times your employer will match a percentage of your earnings.
Okay.
So like say if you put aside 2% of your pay each week, they'll match 2%. And that's usually pre-taxed earnings, which means you're not paying tax on the money that's going in your savings, which is nice. It's tax advantageous to do that. And then they do it through whoever the provider is, whether it be a Fidelity or a UID or an ING or whatever, and a third-party administrator that does the mutual funds or the investments.
And furthermore to that, Pastor, actually, as he spoke of those banks that are non-banks now, two of them used to be banks. So what happens is you get these non-banking institutions that dabble on both sides, and at some point they either become both or they dwindle down to just not doing the banking side, because the banking side becomes a little bit of a hassle when you don't have to deal with that and you can be in what Jim talked about, 401k money, employer-sponsored plans, and things like that. ING used to be a bank. They ended up selling their banking side to Capital One, and that's where Capital One 360 was born. Okay, because it used to be ING. It used to be ING Orange accounts. Yeah.
Okay.
So that's the type of thing that happens that when these financial institutions start realizing, wait, there's money on that side, and we're only doing this, then they'll go over there. But the thing is, they have to maintain that. And sometimes that's not easy to do because there's a lot of cost of running the banking side of money.
Okay.
There's a lot of that's why banks charge fees, because they have to pay for all the services that people really don't think is a service. A checking account's a service. They don't understand that though.
Now that leads us, we had a question just came in that says, will digital money mean no bank fees?
Oh no. I mean, if you're gonna do it digital, I mean, whoever, we live in a capitalistic society. Capitalism is based upon the entity making a profit. Nothing's done for free. So if it's paperless, there has to be some form in which the entity that is sponsoring that particular program is going to be compensated. So there's going to probably be a fee. I can't see there not being a fee. So.
Okay.
And to answer that question, to Sam's correct. It will always be a fee, but this is what banks do, and I work for them. If one fee, let me back up. Banking is like a following situation. So there's large banks, and then the little banks kind of follow the large banks, right? I'm gonna give you a fee that most people hate paying, but you probably won't ever see it go away for a while, and that's ATM fees, right? That was born on that fee was born on. Hey, I pay for the ATM machine, but your customers are coming over here using my ATM machine. I'm going to charge them. And then the bank said, well, because they're doing that, I'm going to charge them too because I told them they got to stay with me. That is a traditionally, that fee should be going. Here I am telling you that, but it won't, because that's fee income to a bank. And if they get rid of that fee, they're going to find another fee to replace that. Because to Sam's point, this is a capitalistic society, and they have to make money to stay in business. People, free is obsolete. Okay, there's really nothing that actually is free.
Okay, so help a person like me, because I'm one that don't even carry a cell phone. So I have one. Unless I'm going out of the country, out of the state, I normally don't carry it. So how long do you give us, the ancient ones of old, to write checks?
I'm gonna be honest. Really, the only reason you're still writing checks is because the places that you go still take them. The banks won't control that.
No, I just write my bills out in checks. The banks won't.
I still pay my daycare in checks because the woman who runs it is old school. She wants checks. It's the only check I write. The only check I write.
Wow.
However, when she stops taking checks, that's going to help the obsolete process start. So really, it won't be the banks discontinuing it, because it's a trickle down effect. The bank could come out with a product tomorrow and snap the finger and money go, but it's going to cost you some money to have. So there will always be businesses who still will have the antiquated or the older traditional way.
People, it's very good to me. They don't charge me like that for my checks. So to me, I'm thinking I'm getting something free here. I guess I'm not. It's just going to be attached to something else on the other side.
Oh, most definitely. Most definitely.
Okay. So are the banks intimidated with all of these non-bank, all right, institutions? Do we intimidate you?
No, they work together. A lot of times they're working together in the background. You just don't know that the banks are working with the non-bank.
What?
We're all in the same money. In order for me to listen, if I'm the bank and I'm holding your 401k for the who's holding the actual money? The money has to sit somewhere, and that's where I come in. I hold it for you. You can administer the plan. You can make the rules. But I got the money for you.
Wow. Okay, we have a couple of more questions, but I need to ask, Jim, right now people think that there's no benefit in insurance unless you die. Could you give us some enlightenment, please?
Yes. Now there's a new type of insurance out there. It used to be life insurance where you had to pass away to get paid. But now included with the life insurance, whether you buy term, universal, or whole life, you now have living benefits. I have clients as young as age 40. I had a client recently, last year, that had breast cancer, stage 2. She's doing fine. They did a lumpectomy, and she received $59,000 from the company. She was back to work in 5 months. And they do pay for living benefits now due to indemnity, whether you have cancer, heart attack, stroke, ALS, Alzheimer's, dementia. So there are triggers that pay lump sum payouts.
I hope our viewers are listening to this, because they're so limited in their thinking about insurance and things. It's only going to be used by people after I die. So why even invest?
Well, Pastor, I'm sorry, Jim. Go ahead, Jim. I didn't mean to interrupt you.
And there's also cash value policies also that either you can buy a term that gives you full return of premium after 20 or 25 or 30 years, dollar for dollar, or there's universal life or whole life that pay a modest 4.3 interest each year, and it works as a retirement savings. So it's a way to save. It's a way to provide a tax-free death benefit immediately if you pass on. It provides tax-free income if you get disabled to pay your bills. And if you live, if you have a cash value policy, you get the money back in return. So one day you will collect on that either way.
Okay, to all of our viewers, please listen to what he's saying. This is such an open door that a lot of people do not take advantage of at all.
That's true.
Okay.
Jim
we have a question. We have a question.
I'm sorry.
Go ahead, Sam. I apologize.
No. Yep.
Okay. The question is this. Have your institutions discussed nanochips?
I'm not aware of that. That's a Calvin question.
Listen. At the lower level where I'm at, no. And the truth, I'm sure they have.
Yeah.
I haven't heard
Okay.
it, but I'm sure they have.
There's a part B to this one. When or is it expected that the U.S. will transition to the chips? So I think the thing we need to explain to our viewers are first, what are nanochips?
So a nanochip is basically, I'm trying to be politically correct here, so I'm gonna just be honest. A nanochip is a chip that you can put anywhere that controls a function in your card right now, your debit card or your credit card. You take it out, there is a chip in there. And if you remember, I think it was 3 years ago, we went to the chip idea in the card. Remember, we used to use the magnetic strip.
Right.
So everything is a development upon the next thing. So now the chip's in the card. So obviously now let's go back to what Sam was talking about when you walk in the store and it charges you there. That is a functionality of a chip, of some computer program that can read and store and hold information. In your card, in that little chip, is all the information of every store you went to, how much that chip holds information, holds data. So the nanochip is a nano meaning small, it's a microchip, but it's very powerful and it holds a lot of information and it can process information very quickly. We're talking about getting to a point where we're walking around with those chips. And there's places right now in the United States that run off of that. I think I just saw a story, I forget where it was, about a place you walk in, the chips in your hand, and you just do like this, and that's how you get in or pay, and that's what that might be what the viewer's talking about. How long before we get to that? It's here. There are places that use it already. In Connecticut, you can put a chip in your kid to ID them. That is a service you can deny. In Connecticut, you can ID your kid with a chip. So it's already here.
COVID is going to accelerate all of this.
Yep, exactly.
So it's only going to move at a much more faster and the excuse is for your protection.
That's right.
People,
that's right.
I mean, cashiers, some people don't even like to touch money. They're wearing gloves because you could transmit disease.
I'm with you on that.
With touching of money, so.
So to Sam's point, that's going to be accelerated. COVID provided that opportunity that now we can look at those things a lot faster because guess what? You, the people, are, oh my God, don't touch me. I don't want to catch COVID. And the powers that be are going, yeah, okay, we'll help you with that. That was already going to be the plan at some point anyway. Okay. Now it's just advancing that. You understand?
Okay.
You offset from all this technology is you have to worry about cybercrime. Like every morning, I happen to be a customer of People's Bank also for 45 years. And I go online on my People's United account and check my accounts to see any debits and credits that went out. But I got my credit card statement a few months ago, my Visa statement from Sikorsky Credit Union, and I saw a charge on there for Tom's Luggage in Indianapolis, Indiana. I'd never been to Indiana in my life, so I called up, I inquired about it, and somebody took my card or got my information off my credit card and charged me. So I had to call the Visa department. They shut my card down right away. They credited that charge, and I got a new card. So always check your statements to make sure about cybercrime because that's the offset of this modern technology. There's a lot of bad people out there trying to hack your accounts and get your information. So watch what you're spending and anything that's odd. That's very important.
And I just want to say that now this is a mini commercial because all of you bank with me, but this is just along this line. People just found that we see fraud a lot here, so much that we just offered a new service called Always Checking, which is totally free, which monitors, now listen to this, it monitors you, your children, your social security number, your cards, your store cards, your debit cards, your email address. If anything happens on any of that in the web or the black web, we will tell you, in the dark web, we will tell you where to go find it and how to fix it. And we're giving that to you for free. But that, you know why? Because that's what's happening with the new wave of technology is those cybercrime people are getting smarter. They are finding new ways to get the money.
Yeah, and I'm with Jim. I mean, I was invaded with a first class ticket to Dubai. I'm like, where am I going?
Did you go?
And this is about the fourth time with me and Peoples. And I went down to the office and they were kind to me, great customer service. And what they do now is if anything is over a certain amount that I gave them, they call immediately. Are you approving this? And I have to give you credit for that. I've done it about 5 times. Each time somebody, well, I gave my husband's cell. Somebody calls my husband's cell because he carries his everywhere and say, Cynthia, did she approve this? So yes, I have gotten that service. I've gotten that service. In fact, I want to tell the viewers, one night I just happened, just like Jim said, about 3 or 4 o'clock, just let me check my monies and see what's going on. Someone had worked to change my ID code. So people's cut me out completely, which I'm grateful.
Yeah.
The following business day, I go back down to the office and they showed me where they were working to cause all of my information to go to their home or wherever the setup was. And so, yeah, the invasions are tremendous. It's real. The invasions are really real. We have another question. What is the best product the banks have for savings for your kids' college funds?
Okay, I just want to say this, and the financial guys are tuning in after me. The word best, we got to stop talking like that. What's best for you may not be best for me.
Yeah.
So it's about your situation. And this is what I need my people to do more of. Go speak to someone about your situation and then hear what they tell you. If you didn't like it or you didn't think that, then go somewhere else and try to get that same information by giving the same information. I can tell you what the best thing was, but that don't mean it's the best thing for you. I get very frustrated with that.
And in all honesty, Pastor, I'll be very honest with you. I don't know if the bank is the best place to go for that sort of a product. I think someone like Jim Dutch, that's what he does. Jim's humble, but he's a leader in his field. There are other programs out there, like Connecticut has a check program that you can put money into, but there's other vehicles to pay for college that I would recommend. And be honest with you, there's a lot of scholarship money out there as well.
That's right.
So, all right, let's jump on it. Jim, please give them an idea of what to do about this.
What I recommend is there's different products with different companies, and Calvin was so correct. The remedy for 10 different clients could be 10 different remedies, like what to advise. And it depends how old the child is. If you have a 5-year-old that's going to college in 13 years, well, you have 13 years of savings. But if you have a 14-year-old that's going away in 4 years of school, you better put some more money or hurry up. So it all depends what college they want to go to, if they're going to a private school or a school in the state school, or the age of the child. That's all important. And how many children you have. Sometimes you have 3 or 4 children you want to put college funding for. So that all comes into play there. But you do need individual service and individual counseling for each particular situation.
And let me just say this too, Pastor, to add to that. I'm going to give them a simple answer. I talked last week about systems. Here's a small, simple system to start with your kids. Open a savings, set up an automatic transfer from your checking account or your savings account. Start right there. So that when you go see Jim or Sam or whoever, you have a lump sum you can say, hey, can you put this up so I can do something with it? Start small and then get to the big. People want to go, college is expensive, so they're thinking about the large dollar amount. Do something simple like an automatic transfer. The bank has systems to help you do that, so you're not even thinking about it. Next thing you know, 2 years later, you got $5,000-$6,000 you didn't even know you saved.
And it's so simple. It's so simple. But Jim, I have a question for you. What would be your recommendation in insuring an infant child? When I say an infant, I mean a month old. What would you say to parents concerning that?
We have programs for month-old children. They could buy a whole life policy starting at $25,000 benefit and upward that has a cash value. Premiums could be as low as $20 a month, which is only 70 cents a day.
I hope my viewers are listening.
And attached to that, you do have college scholarships where the child could get a college scholarship or a grant that is forgivable. It's not a student loan that you have to pay back. So when they're 18, they could get some money for college also by having this product.
Okay, let's put a pin in that. How do you go about getting the grant part?
That is when the child's in their senior year of high school. Okay.
Okay.
They apply before February, and they have to have a C average or better. And if they do any community service involved with the church,
about a C average.
Right. Exactly. And if you do community service, that's a good, in your resume.
Oh my God.
I like to add to what Jim said. First on in the insurability of an infant child. First of all, the question would be, why would you want to insure a 2-month-old child? Mainly because you don't know what might happen later on in that child's life. So if you get a life insurance policy early, the child's insurable. I mean, you may develop some sort of disease that insurance company may think that you're uninsurable. So that's one of the reasons why you don't want to insure a child at an early age, because you want to take advantage of, hopefully, and pray that they may pass away. You want to do it because you're protecting the insurability of that child. Second thing, as far as the grants, depending upon what school you're going to, Pastor, there are a lot of grant programs out there. For example, I know that Georgetown University, they were seeking young African American males to go to the school, and depending upon what your grade point average was, you may have gotten a free ride. We, because of VIP, that's what we do as far as helping kids go to college. One of the things we do explore is how to best afford it. College can be affordable. The tough way to do it is just get a student loan. And they're giving out lots of loans. These kids are graduating from college, unfortunately, with mortgages before they even get out. I mean, I was fortunate to go to Sacred Heart University when it was affordable. I paid $3,000 a year.
What was that?
And every year it went up $500. For 4 years, I paid $16,000. Now, if you go to Sacred Heart now, if you've been to the campus, it's a beautiful campus. Love what they did, but it's $16,000 per credit. Maybe you're paying $50,000-$60,000 to go to Sacred Heart University. It's a big difference.
Somebody's got to pay for the buildings.
How do you pay for that? That's the question. Many times you have to be an athlete into some sort of sports or good grades. So grades are important.
Okay. Another question I have, Calvin, can a parent bring their child in to start their own account in banking? If so, what is the minimum age?
So I love that question, because I get in trouble for this answer. I'm still going to get it. The minimum age is zero. The minimum age is zero.
Okay.
Because the bank has no rule that says, let me back up. The rule is that a minor in Connecticut cannot enter into a contract. That's the rule, right?
Okay.
So we have this thing called an identification agreement, which says, hey, I'm the parent of the minor. If the minor messes up, I'm going to take responsibility. If you sign one of those, then you are able to open an account for your kid, and it doesn't matter their age. Now, you'll find bankers that won't want to do that, and it's because of a risk factor, right? Because now, the younger the kid, the more chances they're probably going to mess up. I am not of that. I will give a young kid an opportunity with a parent that wants to show them finances. I've opened accounts for 2-year-olds, and I see them 5 years later, and they still have their account. My daughter had an account since she was 11 years old with a debit card. Okay, so again, I always tell, there are tools you can use to help you get to your goal. The bank has a lot of them. You just need to be willing to listen, understand, and learn.
Okay. Is there any kind of system that you guys know of that young people can come in and learn about money? Because, please, viewers, don't get upset with me. When a parent who's living in a certain area is buying a $200 sneaker, that child will not understand the value of money. They'll think that money has no value at all. You walked in, you gave me a $200 sneaker. They have no idea of the electric. They have no idea of the rent, because most of those are renters. They have no idea of all of the supporting costs. Is there any way or any group that you know that will teach our young people about this money?
It's called VIP College Prep Program.
That's one. But Pastor, like I said last week, unfortunately, we live in a society that our educational system is tailored after the industrial age. The industrial age is about capitalism. It's about working.
Yeah.
So there's nothing in the curriculum until I think through college, that will teach you how to handle money. So then the problem becomes there's something something that kicks in most individuals' lives. It's called your paradigm. Your paradigm is a standard, a perspective, or a set of ideas. Ideas of thoughts. So I always ask, when I sit down and I talk to a client, I ask, what are you thinking about as it relates to money? Because we all have these different ideas, these different thoughts, and that which is your dominant thought is how you're going to handle your money. It's funny how you see professional athletes and, who get into, they go into the NBA, let's say broke, make a ton of money, and then they lose it all. It's because that paradigm, they're not used to, they're conditioned. I mean, you hear people who win the lottery, make $1 million off the lottery, and then they lose it all. Why? Because they're not conditioned. Their ideas and their thoughts as it relates to money is that of being broke. And whatever is your dominant thought, that's what eventually will happen. And I learned that because there's a story, a guy named Job, and here it is, God sitting around having a conversation with the devil, and he brings up Job, and he asks him, have you considered Job? And and it baffled me. Why did God bring up his name? He was a righteous man, doing good. He had a lot of money. He had, he lost everything. He lost his money. He lost his family. But then, if you read in the 3rd chapter, in the 20th verse, there's a little blurb that says, Job said, "The thing I fear the most has finally come upon me." So you have to think. Your thoughts. He was thinking about losing money. So we grow up, like I said, I grew up, and my family, we didn't have much. We lived in Beardsley Terrace, and I grew up with a certain mindset about money. In that community, is the bling bling, the sneakers, going to the, buying, certain outfits. And so if you don't change that mindset, change your ideas or your thoughts, you're going to wind up growing up and doing the exact same thing. That's your teacher. Your environment is your teacher, unfortunately.
So is it safe to say that the answer to that is that it starts at home?
Yeah. It might not be able to. Some things it might not be able to. But I came up with this wonderful idea. Being that we are so community oriented, if we had a session and had you guys to come back and talk to the Generation Z, which I think is majorly important right now, because it's Generation Z who do not understand the concept, because they never had to really earn it. They mostly don't understand the concept of how this whole thing goes about. And they have not been taught necessarily the patience of accruing wealth and how to pay now. It's my whole saying since I've been pastoring: pay now, play later. And if you pay now, you'll really be able to play later without any regret, because I'm a firm philosopher. Why are you going to an island when your rent is due? You may need to stay home, pay your rent, save the island money.
But those are generational curses. Those are generational curses.
It really is.
It is, but Pastor, I think it's deeper than that. We live in a universe of laws governed by a system of order. There's laws that govern everything we do. One of the laws that relate to money is called the Parkinson Law. And that law says that expenses always rise to meet income. So you have, for example, this young guy who's successful enough to get a job at an early age, right out of college, as a teller in a bank. He works his way up to become a manager, an executive. Starts off, let's say, making $16,000 a year. Now he's making $500,000. Most young people, what they will do as they rise, of course, now you're making more money.
And more expensive.
You can afford a better house. You can afford a better car. You can afford. I mean, you start off maybe buying suits at I don't know what is that
I don't
the place
know.
out of Stratford that everybody goes to.
Uh,
I can't think of the name of the Burlington Coat Factory.
K&G.
Now you can afford Gucci and everything else. So as you make more money, the expenses will rise. So that's a law. It's a Parkinson law. Now, how do you counter that? I happen to be mentored by I use a material of a guy named Brian Tracy. Brian Tracy says, if you're going to counter a law, you have to introduce another law.
Right.
And
true.
what he suggests is that you engage in, you just set limits. For example, if you get a raise, let's say you get a $10,000 raise, why don't you set a limit to say, listen, 50% of that I'm going to save. The other 50% I can do what I want. You can save, put in an investment, stocks, bonds, mutual funds, your retirement plan, so it can grow. I mean, first of all, after you tithe, but that's another spiritual law. You tithe 10%. Giving back is very important. In fact, Jim, who I work with very closely, he's a giver. Jim is very successful because Jim is a tremendous giver.
All philanthropists are.
And I find that the more you give, the more
It's
blessed
a
you are.
law. It's a law.
Yeah. So you
It's
have
a
to
law.
understand there's a man-made law and then there's spiritual law. If you get in right relationship with those laws, I would suggest you get in right relationship with the spiritual laws. Things can happen. You'll grow.
Yeah.
And Sam, I think it's important to let people know that giving isn't always money.
Correct.
Giving of your time, talent, and treasures is the same.
Part of it. Yes.
And I think sometimes when people think about it, the only thing they think about is dishing out money.
Money, they do.
And
That's
I'm
it.
not saying that money is not valuable because we all know it is. But I'm saying sometimes it's your time,
Yeah.
it's your patience, it's your concern. And it may be you having a good idea, you know.
But Pastor, I think that
of the whole person is really what God is speaking about. So because that's my field, we're gonna back away from that one because
Okay.
it really is the tithing of the fullness of who you are as a person.
Yes.
I got a question for you though. We oftentimes, before we get off the air, we're talking about investments. So would you please give our viewers who may not know how to jump in on investments, would you please give them an idea of how they can start, even to sit down and talk with someone concerning investments?
I'll
I
start.
put together some statistics here, knowing that we're going to talk about retirement and savings. And I put 3 key points here. 58% of Americans actively save for retirement. So 42% of the people out there do not save anything for their retirement at this point. Out of that 58%, 48% of them have less than $10,000 saved for retirement. So that means 90% of the people do not have more than $10,000 for retirement saved. And the other thing is, we talk about baby boomers, and we fall into that category. 50% of the baby boomers think that Social Security is going to cover most of the retirement income, and it's not. We don't even know. There's no guarantees that Social Security will be there 30, 40 years from now. Where's the money coming from the funding? So you definitely want to save on your own. And like I mentioned before, if you could do some savings, pre-tax savings, or some automatic savings, when you said EFT, where you don't see the money, you can't spend it. Have it go in automatically, whether it's a bank or an investment company or wherever you put money away. If you don't see it, you can't spend it if it's not in your check.
All right, the EFT, explain to our viewers, because sometimes we assume that people know.
EFT is electric funds transfer. You can do that in a bank account. You could do that in a stock account, a mutual fund, any type of retirement account. There's different places you could put it. There's different vehicles, but
Okay.
I would say when you get paid, if you don't have that money in your pocket or your paycheck, you won't spend it. So try to save it right in the beginning when you get paid, because all of us say, "Oh, gee, I get paid this week $500. I'm going to put $100 in the bank." It's hard to get in that car, drive
That's
to the
right.
bank,
That's right.
in.
Yes.
You want to go to dinner, you want to buy something, you want to go to the movies, or there's other things you want to do with that $100. If it's out of your account and not in your pocket, you know it's in the bank, you don't see it, out of sight, out of mind, and that's the best way to save.
Okay.
I like to add to that, Pastor. Faith without works is dead, right? So that's exactly what Jim just explained. If you want to believe that you're going to have some money, you got to have something working. You either have the EFT working, you're going to drive it over. But problem is people aren't going to physically do it. You're going to go to the bank and catch a check. You're going to say, oh, I got to put that 50, but I got to go pick up my kid. So you're not going to put the 50. You got to use the systems. EFT is another system to help you save money. My problem is that people don't want to use the systems. They tell themselves every day, I'm going to do this, I'm going to do that. Faith without work is dead. Let the work help you. Like, do it.
Okay. You know, to answer that, one of the reasons why before you get your net pay, the government, they take their money out. They don't trust you. You know, so if you get it, you're gonna spend it because again, that law, the Parkinson law, will kick in. Expenses always rise to meet income. You will find if I give you an extra $1,000 a week, I guarantee you
find something
to do with that $1,000.
If you give it to me,
not you, Pastor. I'm just saying.
You know me.
You handle money well. We can see that. You know, I'm talking about who I'm talking about. You know what I'm talking about.
Okay, yeah. Okay. I think the understanding is I think we're getting into it. But I have a question for Jim. Jim, let's say because you hit the baby boomers, and the baby boomers, they're the longest living ones so far. What would you suggest for a person who lives normally? When I say normally, I mean not extravagant, nice house, nice little house and all. Probably about $1,500 to $1,700 a month from Social Security, things like that. But they're still working and doing and all of that kind of stuff. What should they be looking at in the bank for security?
They should try to put away 10% of their income, their paycheck every week. That would be a nice number. Obviously, you can put 12 or 15%. That's better. But if you shoot at 10%, you should. It depends when you start saving. I mean, if you start at age 60, you're not going to have too much money at age 65 saving for 5 years. But if you start at age 40 or 45 and you have 20 or 25 years of savings, you'll have a nice nest egg by the time you retire. And also, in our age category, I happen to be 61 years old. I don't reach full Social Security until like almost 67 and 8 months. Yeah. It's no longer 65 where you get 100% of Social Security. So the younger people are not going to get full Social Security until they're 69 or 70 years old because people are living longer, which is a good thing. So therefore, they got to wait longer to reach full 100%.
Personally, I'm 24 and holding, so I can start. I can start anytime.
You look good for 24, Pastor.
Here we are. How many credit cards are too many credit cards?
I think one.
Listen, okay. I wanted to, and I like that we talked about this last week. I wanted to really expound on the credit idea, and I said it last week. I'll say it again. Credit is a game. So the real idea is, what are you using the credit cards for? Are you building your credit? Are you trying to increase your credit line access, meaning having access to credit, right? Mm-hmm. Those are the reasons you add credit cards. Just because you got a good credit score and you can go get a credit card, that's not a reason to get one, okay? So the idea is, if you're playing a game, if you're trying to maximize your score, if you're trying to increase your credit limit, if you're trying to teach your kid or somebody how to use a credit card, those are reasons to get credit cards. Not because, oh, you know what, I got a 750, I'm gonna go get me a car. It doesn't make any sense. Or if you're playing, again, the rewards game. The rewards game is that game can be really cool. I'll give you an example. I had a business customer of mine who used our rewards card to create $7,500 extra every year from rewards in cash. That's a game you want to play, okay?
Maybe I need to look in that game.
Yes, because here's the thing. You're going to use your credit card to buy regular stuff you're buying anyway. You buy gas, you buy groceries, you buy haircuts. You're going to pay it right back. Get the rewards points for it. Why not? And the thing is that companies have gotten really smart with the rewards points, because now they're charging you an annual fee because they've seen people take advantage of the reward point game. So the answer to the question is all by situation, but you should not be out there just opening credit cards to be opening them. And if you're going to be transferring balances, then the 0% game is another game you play. You got 29% on this card, you transfer to a 0, that's a great game.
Okay. Another question real quick because our time is almost over with already.
Good Lord.
I know. What is a thrift bank?
Okay, so a thrift bank is a smaller bank. Banking kind of goes and there's categories to banks. And I'll give you an example. Actually, matter of fact, People's United Bank is actually, we just hit another tier. So the thrift bank is a smaller bank that's regulated by the Office of Thrift and Supervision, which is a government agency charged with making sure banks follow certain procedures. However, when you hit $50 billion on deposit, you go to a whole nother agency in the government that regulates you. And that's kind of like where the thrift changes.
Okay.
Now it ain't thrift.
So then a thrift bank, the question is it an easier place to go and get a loan, or it doesn't really matter?
Yeah, so here's a great thing about going to get a loan, right? And I'm glad that came up too. I'm going to give you an example. I'm going to say this on here. Don't come to People's to get a car loan because we don't do car loans well. Every person that calls me and says, oh, I want to get a car loan, I send them to the credit union because you're going to get way better opportunity there. At my bank, I'm going to give you a 7.99% no matter what your score is. Listen to that again. No matter what, you could come to me with an 800, I'm still giving you a 7.99. That's not the type of bank you want to get a car loan from. You want to go to a credit union or a thrift bank, a smaller bank that offers credits. Your interest rate by credit score. Meaning, if I got an 800 and I worked hard to get it, you're going to give me that lower 0% or 1.9 rate. That's what people have to study when they're going to their bank. It's not about the bank itself. It's about how the bank does their decisioning.
Okay, I got you. Another question. Fridays is Teach Your Child Save Day, and that was nationally set up. Does your bank do that, Calvin? Teach Your Child?
Not on a national scale. We have not done anything like that. But I'll tell you this. Remember that People's is 177 years old this year, I believe. We've been the same bank, and we've done 1,000 things like that with different agencies in the city. We used to do something with ABCD where we would give you money if you saved it. You save money and we would match it. We've done a lot of that type of stuff. So I'm not saying that, we didn't did it so we don't have to do it now. It's just not a program I've heard of, but we are actively looking to do those type of things in our community because we want to help people learn how to save.
Okay. Oh my God, our time is going so quickly. Another question. The question I have for you is, the banks are tightening up in giving loans, all right? At the same time, if an individual wants to purchase a home and the banks are tightening up, how does that work if I'm not apt to maybe get it from you?
So the banks are tightening up. The best advice I can give anybody is to make sure your ducks are in order or in a row. And here's the other thing too.
What kind of ducks?
Okay, this is what I'm saying. Your credit score, your income. The big thing now is your income, right? A lot of people have gotten some type of bailout or unemployment money, or I said this last time, that's a risk to the bank. Because if you needed to get bailed out and another crisis happens, you're going to need to get bailed out again. And that's why you got a loan with me. So what I'm trying to tell people is just wait a minute. I actually have been giving this advice. Just wait a minute. Continue paying your bills on time. Continue saving your money. Because right now, our house inventory is not even that good anyway. To be honest,
it's not.
Really not that great. So you, be honest with you, the best thing to do would be to wait and continue to keep your ducks lined up. Because the further away you get from COVID, the less COVID's going to matter to the bank. Does that make sense? Meaning, we're looking at what you're doing in COVID. If you didn't work, if you had a gap in your employment, even with businesses, I can't give you a business loan if you got a PPP right now. It's a risk. I don't know if you're gonna make it. You understand? So you gotta understand. Right. So what I'm telling people is just stay steady, be patient, continue doing what you were doing. Work on your credit score, keep your income, save your money. When that inventory opens up and you walk into a bank for a first-time home buyer program or to do a regular 80-20 loan, that means 80-20 just means conventional, meaning you're gonna bring me 20% and I'm gonna give you 80. That's what that means. Okay. If you're gonna do that, then I'll be ready to do that for you without looking at what happened to you in COVID. Because right now I'm looking at what happened to you in COVID.
Okay. So what about refinancing? If a person wishes to refinance their home?
It just needs to make sense. Right now, if you have a 5% rate or higher, go to the bank, please, because the rates are very low. However, the flip side is your ducks got to be in a row for you to get that loan. They're going to scrutinize your credit way more. One late payment could keep you from a mortgage. Dead serious. One late payment.
That's deep.
Okay, so you just gotta make sure you stay focused on what's going on. Some people just get anxious and they ready to go. Just hold tight. Let this pass.
Okay. Another thing, guys, we are so interconnected with China and other places from getting our materials and our goods. Now that this block and this unrest between us and overseas, how will that cause our economy to flourish, or will it not flourish?
I would say as often as possible, try to buy American cars, deal with American companies.
Okay.
I could see the trade with China is going to be a lot less than it is now. And, and it all depends on the election, what happens in November.
Okay. So, because China's materials are so less expensive, I mean, you can go online and get a knockoff on anything from China.
Anything.
The same thing that you would pay X amount of $1,000 to carry it in America. You can go to China, get into their market. You could probably get it for $100 or maybe even less. So, knowing that this is going to be taken away from a lot of people, even the sneakers and all, what do you think is going to happen to America?
I think it could result in inflation, Pastor, because again, the economy of the United States is based on capitalism. Capitalism is based upon making a profit.
Mm-hmm.
The reason why a lot of companies go overseas is because the labor is cheap. China has a large labor pool, so you can pay less to produce a product. If some of those products have to start to be produced here in the United States, the cost of living is much higher here in the United States. So, you're probably looking at inflation. Things will go up. So you should prepare yourself for that.
Okay.
Yeah.
We're just about finished. You guys have been so tremendous. What would be your comment or your wisdom to the viewer when it comes to money right now? What would be your comment?
If you went through this COVID time and it came out with a positive, which means you're in the black in Sam's terms, okay, you know what? With that money, chill for a second. Continue to try to grow it before you make haste decisions on buying this or buying that. Because have you noticed there's nothing in the stores, okay? Because everyone bought everything. So you sit on your money, wait, and keep growing it. Find the system to keep growing it, and find some way to continue to keep money coming in. Because as COVID goes away, you're going to go back to the same place you were, but you want to be in a different spot, which is a little bit more wealthy. That's my advice.
Spend wisely and try to save a little. I mean, that's
My advice would be, I would say, learn from Job. Think about what you think about. Focus. And then I would say, I learned this from a gentleman named Bob Proctor. And honestly, it blessed my life. It actually transformed my life. I would say, set a goal, set a vision. What is it that you want to accomplish? Number two, then exercise two things, gratitude and forgiveness. And the way I would do that is I would get a sheet of paper and number it from 1 to 10. And at the bottom of that, 1 to 3. And every morning when you wake up, think about what it is you want to accomplish. Then list 10 things that you're grateful for. List 3 people you want to forgive. Do that every day for 30 days. I guarantee what you're doing is you set a goal, you're exercising gratitude, you're grateful, and you're giving. So a vision with gratitude and forgiveness, you put that combination together, I think you'll see God do miracles in your life. I witnessed it.
Thank you so much to all of you. Thank you for your kindness. Thank you for being on this show. We have really been able to talk to a lot of people and get them straight with this finance thing. Have a good week. God bless you all.
Thank you.
To our viewers, God bless you. Have a good week.